Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Just what is the stronger case for the stock market these days? Bullish or bearish? We're going to see if we can't find out from our panel members this time around. Executive Vice President of Zacks.com, Steve Reitmeister, Research Director, Shiraz Mian, and Market Technician, Kevin Matris. So I'm going to start with you, Shiraz, this time, because of the three here, you are closer to the bullish camp, I would say.
That's fair.
What are some of the bull factors impacting the market these days?
Let me tell you what the bear case is, and I'll refute that, and that would be the bull case.
Okay.
Now, there are two main questions right now. Both are macro in their nature. Number one deals with the U.S. economy.
Yeah.
Are we heading into a recession, or it's kind of a slow growth environment here? The slow growth environment will be the positive case. The a recessionary move would be the negative. The same on the European side. The worst case scenario is that these guys don't know what they are doing, and it'll all blow up on them, freezing the European financial system, dragging us and the rest of the world with them. I don't think either of those two scenarios will play out. On the domestic front, I've been saying repeatedly that yes, the economy is slowing down, but it's slowing down. It's not going into a recession. Now, a 1.5% to 2% growth rate may not sound like much to many folks out there who are unemployed and really stressed out. But as far as stock market investors are concerned, there are plenty of opportunities you could have to have positive returns in this kind of environment. On the Europe side, a lot is riding as far as Germany and France is concerned in the long-term stability of the Union. They are letting this thing slide so that they can extract more concessions out of these, what's a good word for Greece and Italy and Spain and Ireland? Okay, thank you. That's what's going on. Eventually, they have to put their act together and come out with full force and authority to back up the common currency. If they don't, the union will break apart. So that is in a nutshell, the bull case. It's unsettling, it's destabilizing in the near term, but the long-term view is positive.
That sounded quite bearish.
That was the bull case,
I don't even
really?
want to hear the bearish case.
Let me just follow up with one thing with you, Shiraz. You've been writing a lot about Greece and Europe lately. Are these European worries overblown?
They are not, actually. Europe has some serious questions they need to deal with. The problem with Europe is that there are two types of problems. Number one is the situation like Greece, which is an insolvent country. That situation cannot be rectified whatever the Europeans do. And then there you have Italy and Spain, which are basically liquidity problems, and the market seems to be combining the two, and the European leaders don't know how to separate the two, and that's where the problem is. It's a question of confidence. And it's not getting resolved anytime soon, and that is the problem.
All right, I'm still trying to get my head around his bull case, but does his bearish case match up with your bearish case?
I think there is a greater likelihood of recession. Just taking a look at the numbers, or you talk about the the research that's been done about when you have this much debt. And the drag that it creates on an economy, and that drag could be just muddled through growth, which would be fine for the stock market. It wouldn't be a robust stock market, but it would not be going negative. Just kind of nice, slow coasting higher. But I do think we're going to slip past muddle through into recession. I'm not particularly pleased with the economic data I see. But here again, is there a silver lining that's out there? Is there a bullish idea? If there was one bullish idea that I would pull out, it's that cash and bonds are so unattractive that it creates a little bit more of a floor under stocks. They don't have to go down as much, even in a recession, to be considered a better value than what you're going to get with your money. So, recession brings about a 20% decline in earnings. And so if the Dow got to, if the S&P got to 1,000, it'd still be about a 6.5% earnings yield on your money versus 2% in a 10-year bond. So I believe it's more bearish right now, but there's a bullish silver lining here or there.
All right, Kevin, where are you at in this?
It seems like we're
discussion?
we're talking about varying degrees of bearishness. You know, the most bullish argument for the economy and the market right now has to do with corporate profits, and it also has to do with the resiliency of the consumer spending. Mm-hmm. But if you were to take a look at corporate profits and you were to take a look at the larger macroeconomic numbers, they cannot keep going in opposite directions forever, because that is exactly what's happening right now. And if you were to look at, you know, governments around the world starting to pull back on their spending, if you were to look at, you know, the slowdown, significant slowdown that has happened and that is projected to happen around the world, you're going to have to see something give. And what that give is, it's going to have to be earnings. So I do see the market going down. I do see a larger pullback for the economy. I don't really see a recession yet. I just see a real slowdown. It's going to persist this way for a while. I do believe, as Steve said, I do believe we're going to see the market probably get to 1,000 for the S&P. Mm-hmm. I think at that point you probably have a really good buying opportunity. So I'm not expecting, you know, an apocalypse. I'm not expecting the market go down to zero. But I do believe there is a stronger bearish argument at this point.
All right, quickly, we have a two-day Fed meeting up on the docket this week. Shiraz, is everybody really banking on the fact that the Fed's going to come up with a solution here to boost this economy this week?
That's the only game in town. There's nothing else that's going to happen between now and the 2012 election on the fiscal side. So the Fed is the only agency that could do something, and they need to be seen doing something. This so-called Operation Twist is basically a move to scare everybody out of the long end of the yield curve. So the long-term yields are already 2.5%. Right. How much more you could compress those? But the idea is that you kind of scare away people out of the risk-free bonds, and they would hopefully buy corporate bonds and stocks. And that's the hope that Bernanke is banking on right now.
Okay, talking about stocks, give us your top pick for the week.
Yeah, I'm going ultra safe here with McDonald's. If you take a look at how they did in the last recession, the corporate profits just kept going higher because, you know, people downgrade what they're willing to do at restaurants, and so they fared fairly well, and also you get the cushion of a very hefty dividend. So safe, safe, safe.
And they're testing new ketchup packages too.
Well, that's the main reason why I was purchasing. I'm glad you brought that up.
Or catsup, if you happen to get your ketchup with a C. Yeah. Shiraz.
Ralph Lauren. This is a play on the high-end consumer. There have been concerns about the rising prices of cotton and its impact on apparel makers' margins. Mm-hmm. But their brand and global presence and prestige gives them the pricing power to more than offset the input costs, and that's showing up in estimate revisions. I think it's an excellent story for the current environment.
All right, Kevin.
Mine is in the consumer staples sector, and it is Hershey Company. They are one of the largest manufacturers of chocolate candy, non-chocolate candy, and a bunch of other types of...
Shocking. I did not know that.
Right. Well, they do a bunch of other stuff too, but it's a great company. If you were to look at their trailing 12-month sales growth, really a quarter after quarter for the last 4 years, they have been on just a fantastic uptrend. Fantastic projected double-digit growth rates, great pricing power, and their profit margins just continue to expand. So if you were to look at where they are right now, they just broke out of a bullish consolidation pattern. My price target on Hershey's is $68. That is a 14% gain from here. I think it's a really good stock.
All right.
Fantastic.
Regardless of whether or not we see a recession or not.
All right, interesting. Hopefully you gained some interesting insights from this conversation. Fresh commentary up on Zacks.com periodically through the week that you're going to want to keep an eye out for. With everyone here, I'm Terry Ruffalo.